today that said 99% of homes are sold by a realtor in Canada.
Oh, I love that stat. Okay, good to know. Great way to start.
Yeah.
All right. Well, welcome to our information session. This is called Eliminate the Confusion, your home buying journey, and everything you need to know about buying and selling real estate and mortgages.
Hi, I'm Linette. I am a mortgage broker. I have been licensed for 5 years, and it's been a wonderful 5 years. It's been one of the most highs and lows of the industry, probably in history. I started buying my own home when I was 22 years old and have done all types of mortgages on my own since that time. So, as a mortgage broker, I've gone through all of the levels of education and experience required by FSRA, which is the government federal regulating body to make sure that the consumers are protected at all times through these processes. So I'm happy to bring my experience and to bring my knowledge and my empathy of being there myself to this information sharing. And I'm so happy to be here with Crystal, who is absolutely fabulous with all the clients, always well informed, and happy to share great advice that's always best for the client. So, Crystal.
Awesome. Thanks, Linette. Working, side by side with Linette on many files has been amazing for communication purposes and also for our clients. But a little bit about me. I've been licensed as a real estate agent in Ontario since 2022. It has been a whirlwind. It's always interesting to meet different clients and go through their journeys with them. It's a very rewarding career. I also bought my first house when I was 22. And we then found another house within that same year, and we sold our other house and purchased the house that we've been in for the past 7 years. And I can relate with you about, buying and selling at the same time, the different market conditions, and just sharing my expertise with you. So let's go on here.
So we're going to start with common myths. And there's so many myths that we could never cover them all. But the most common ones are that, mortgage brokers are only for the back alley mortgages, which isn't the case at all. As I stated, we have the highest level of the consumers have the highest level of protection with FSRA, and banks and mortgage brokers are not the same. I am not the lender, but what I do is sort of concierge what your current position is, what advice you need, what total options are available for you versus going straight to the bank. They have very stringent policies, and not everybody's life situation fits into a bank product. And even if you do, it's not necessarily what's going to cost you the least amount of money. Sometimes the devil's in the details, and I'm here to, uncover those and make sure you have all of the information that clients need in order to make the best decision for current and future goals and what they're striving to achieve.
Awesome. A common myth is I can sell my home cheaper on my own. I'm sure we've all seen driving down the street, there's a sign that says for sale by owner. And this is not always the best strategy. Often people do this because they're thinking they can save real estate commission or do it better on their own. But it takes a professional to be able to do everything in the legally to start. There's a lot of paperwork behind the scenes that we take care of, and just making sure that you're informed, getting your house in front of the most eyes, and selling for top dollar. So that is definitely a big myth.
Yeah, and I heard a stat recently just to support what you're saying is that homes that are bought and sold with a realtor, or sorry, sold with a realtor, have a higher selling price and sell in a shorter amount of time. So that's always important it's always a priority for homeowners that need to sell their home. They need to get as much as they can for it, and a lot of times time is an issue. So
That's right.
and it's sold for more than what they're saving if they don't use a realtor. But 99% of homes in Canada are sold through realtors. So a professional is always so important. So that goes to the next one that says, I can't afford to buy a home. And whether you are a first-time home buyer or selling a house to buy another house, whether you're upsizing, downsizing, changing physical locations, there's many ways to structure your finances and your savings so that you can afford to buy a home. You only need as little as 5% down. And that's not just for first-time home buyers. You can be a second time, third time, fourth time. It can be a second home. And the minimum is still 5% if you qualify for those, what we call high ratio insured mortgages. But the important part is to get your approval analysis and put a strategy into place so that you can afford to buy that home or be in a position to buy that home sooner than later.
Awesome. Well, we touched on all of those points. And again, just stressing, Linette called it an approval analysis. And it's a little bit different than a pre-approval. Just really emphasizing that you've got all your paperwork in, and knowing your budget, knowing what we can actually go out and look for, and feel confident and comfortable with that decision. So next, the importance of a deposit. A deposit is required with all real estate transactions, and this is to secure your contract. And this money has to be accessible, meaning in your checking or savings account, because if it's in an investment account, it could take some time to get it out. But when a deposit is required is once your offer is accepted, the deposit is now due. This deposit amount ranges based on the home's price. It typically is between $10,000 and $50,000. And this is part of your down payment to secure the contract. And once an offer is submitted, I kind of mentioned this, but and all parties agree on the terms and conditions, then your offer at that point comes conditional or firm, depending on the market conditions or your offer. And then that's when the deposit is due.
So that's one thing I just want to reiterate. When the clients put that deposit, they will give it either to their realtor, but typically it goes into a bank account that is held in trust of the other party's real estate agency. And that information is transferred to the lawyer, and it is considered a portion of your down payment. So if your down payment is $50,000 in total and you've given a $10,000 deposit, the difference is $40,000 that you need to account for.
Right. Awesome.
So the importance of a down payment it's one of the 4 pillars of qualifying for a mortgage. As a matter of fact, it's credit, income, down payment, and property as well. So there's various sources of down payment funds. So maybe they're gifted. 70% of first-time home buyers in 2024 actually received a gift from an immediate family member to help them buy their home.
Wow, that's a big
oftentimes it will come from the sale of a previous property. So the lawyer would then hold those funds. You won't get the money from the sale if you're buying another home in right away. So the lawyer has that. So the lawyer will show what we need to verify the down payment. And the reason why we have to verify the down payment is FinTrack, anti-money laundering. Our federal government is just being really diligent to make sure that we have an economy that's trustworthy and that there's not money laundering or, we're not supporting terrorists or anything like that. So that's why we have to go through that verification. But your own savings is another source of down payment. Over the years, you've contributed to RRSPs, TFSAs, other non-registered investments. Maybe it's just even in a savings account, but not cash. Don't have cash in a shoebox under your bed. We cannot use those. Those funds would have to be deposited into a bank account and what we call season for at least 90 days, because we'll need 90 days of history of where funds are being held.
Right.
So I will take this one as well, the credit and liabilities and your credit score. So it's really important when you start your home buying journey to know what your credit score is, but it goes beyond just what your score is. There is what is contained in your credit report as well. So there's two places for you to find it free online. If you want your Equifax report, which I recommend because it's the most used service from our lenders, that would be, if you want to go to Borrowwell, you'll be able to see what is on your report and what's impacting your score. And I want you to sort of keep in mind a pro tip, something that I think everybody should know, so tell your friends, the 222 method. So what you really want to pay attention to is to have the best credit profile for lenders to give you the most favorable terms for your mortgage. So you want at least 2 trade lines. So, line of credit and credit card, or anything like that. Student loan, credit card, line of credit, all of those things are considered a trade line. A minimum of 2 years is the timeline. So keep your longest trade line open. So if you opened a credit card when you were 18 years old, don't cancel that credit card. You may never use it. But it shows the history of credit with the trade lines, which goes in your favor as well. And then you want a minimum of at least $2,000. That shows enough of credit extended to you that will really help you demonstrate your credit worthiness. That, a lot of people think, well, I don't have credit, so that's a good thing. And that's not necessarily the case. Lenders want to know that you can have credit and be disciplined with it and use it responsibly.
Awesome. Love that tip.
So employment and income as part of the mortgage process as well. So if you're employed, there's many different types of income. Only certain types of income are able to be qualified as it pertains to getting approved for your mortgage. So if you're employed, you'll get T4s. If you get overtime or bonuses or anything like that, we can use a 2-year average. So T4s, pay stubs, employment letter. Sometimes we will need the notices of assessment, but that just depends on the type of mortgage you're getting and which lender we're using. If you're self-employed, well, you've already got a strong financial muscle because it's not easy to be self-employed when it comes to managing your finances. So, this might be intimidating for some, but I know my self-employed clients, they're like, yes, I know you're going to ask for these things. So, we will need your business license, your articles of incorporation, your T1 generals, your notices of assessment, perhaps some contracts to support your income if we're going with a stated income program. So that's that. Pension, a little bit easier, but we still need all the bank statements showing those pensions are being deposited into your bank account, and the T4As that show the amount that you're getting. And then there's always those other income sources as well. If there's pensions, maybe you get child tax benefit. We can use that on a mortgage application. Foster care, if you have roommates, sometimes there's contributory income. If you have rentals, there's rent coming in from those. So there's a variety of places to get income. So, it's not always enough to just have a T4 or your notice of assessment, because that brings in other types of income as well. Like if there's capital gains, that's great, but we can't use it on your mortgage application. So, this is kind of the summary of which category are you in, and then we do need the documentation to support that for the lenders, and usually two variations.
Awesome.
I help along the way for anybody that wants to work with me, and I make it as easy as possible. It seems overwhelming, but that's why it's important to have a good team. And like Crystal said in the beginning, we communicate with each other, and oftentimes we can, plan or sort things out for the clients before it even becomes a stress point for the client. The goal is
Absolutely.
to really make it smooth. Starting with the property, which is what Crystal's going to go into now.
Yes. So when purchasing a property, kind of pairing it back to your mortgage, the value of the home has to support the loan, and your home needs to be marketable. And then diving into wants and needs when you're purchasing a home. We all want an extravagant list of things when we're buying a home, but it's really important to narrow down your needs versus your wants. And I've put just a little bit of a graphic here of ideas. And then also my QR code to be able to scan to my wants and needs list to be able to help narrow that down. And it's also just important to note, when buying your first home, it's typically not going to be your forever home. Making some subtle renovations or upgrades to improve your home is great when you're out there looking to get into the market. But your first home usually funds your dream home, getting in the market and building that equity.
I love that. Your first home often funds your dream home. That's great. And there is so many different types of insurance to think about too. And it can be confusing. So I guess that's why we're calling this Eliminate the Confusion, because as it pertains to the home buying, there's creditor insurance. So if you do have less than 20% down, then you will have there's 3 creditor insurance programs in Canada, and it's actually the law to have this creditor insurance for any mortgages that have less than 20% down. So CMHC, which everybody kind of knows, that's sort of the common term, but there's also Sagen and Canada Guarantee, and they all have different policies and requirements. So, it sort of depends on the lender and your profile to which one of these creditors would insure your mortgage with the creditors. So that just means if you ever default on any payments or on your mortgage, then one of these 3 programs will reimburse the lender for the outstanding amount or for the mortgage. So the cost of this is typically about 4%, depending on if you have 19% down or if you have 5% down. It ranges, but it can be up to 4% of your mortgage amount will be that creditor insurance. And you actually never see that. That's really between the lender and the insurer, but you're paying the premium for it. Then there's life insurance. This is so important. And you are offered life insurance and disability insurance. It's, again, being regulated by FSRA, it's our fiduciary duty. We are required to offer insurance to cover this debt. So there is mortgage insurance, which is based on your life, but there's also term insurance that you can always speak to your financial advisor about, which I recommend doing. You want to make sure you have the right products for your situation. Mm-hmm. So there's life insurance, that's you're the beneficiary. It benefits you. Home insurance is like your car insurance. It covers you in case of a fire or any other sort of damage to your home. Mm-hmm. And then sometimes you're also offered a home warranty, also can be termed insurance. Typically, it can be offered for free for 12 months from your lender, and then it's about $20 a month after that. But that covers your mechanicals, like your furnace, your water, plumbing, electrical, that kind of thing. So all of those are very different. And all of those, as a buyer going through the journey, they hear this insurance thrown at them in so many different directions that it really is, good to categorize where that importance for each different type of insurance lies.
Awesome. Thank you. All right, we have our outline of closing costs. This is just a brief summary, but appraisals, this is usually paid for by the lender. Home inspections, this is more of an investment than an expense. When purchasing a home, it's really important, especially depending on the market conditions, to include a home inspection condition. This is going to give your home a once over, making sure that there's no structural or major issues with the home that you're purchasing. And if there is, to be able to outline and understand what the anticipated costs are, or to be able to walk away if it's too much of a risk. We have attached Linette's.
Scan that. It goes right to being able to download. It's called My Mortgage Toolbox. It's an app that will help you understand your pre-approval, what you qualify for. But there's also a purchase finance report, and you can see what your land transfer tax is going to be. If you require that mortgage insurance, that creditor insurance, it'll calculate how much that is going to be. Now, I just want to mention that can be added onto your mortgage. You don't have to pay that on closing, but what you do have to pay is the PST on that insurance premium. And there's property tax available there as well, but the app is useful in so many other ways as well. So it's free. You don't even have to give your email address if you don't want to. It's just about getting good information in the hands of consumers. So feel free. There's no in-app purchases or anything like that. It's absolutely for the purpose of giving you the information you need. And not being surprised by closing costs is a big deal. You want to know what the details are, what the expenses are in this process. And of course, you can always reach out to Crystal or I if you have questions in particular. And your lawyer always has the final. We can give you estimates on certain things. The lawyer always has the final amount that is required for you to bring to close the transaction.
Absolutely. The only thing we didn't have on here, which we've talked about throughout the course of the presentation already, is your down payment total. But again, in Linette's Mortgage Toolbox, you'll be able to enter all that information. She'll be able to guide you through that. And then, yes, with the lawyers, they'll be able to give you that outline on the statement of adjustments. All right. We are going to dive into the home buying process. We're just going to hop on to the other call because this is going to time out.
Yeah, we can always do part 1, part 2.
Yeah.